Good evening, everyone. Very interesting day on the Nifty expiry. Now, if you want to check how the ScalpEdge performed over the last few days, that is this weekly expiry, I suggest you do it tomorrow within 7:30 because TradingView has this habit of deleting all old data from their servers. So probably tomorrow morning after 7:38, you will not be able to access this options indicator for the past week. You will be able to access it for next week, the next weekly expiry or monthly, whichever is going on. But the expiry which has been done today, that data won't be accessible. Number one. Number two, let's get down to today's market data. So I want to explain a very small thing, which is basically context. See, trading is not always 2 plus 2 equals to 3. Now let us see what happened. This is the first minute. This is a 1 minute chart. Okay. So this is the first minute random moves. Then for the next 4-5 minutes, there was a lot of puts being sold. Now this time which we reach here, if you see the time at the bottom, just see the time will be at the bottom and your price will be on your right hand side. Here it is 9:20. Now if you are trading options on expiry day, I believe 100% of the people know something called the 9:20 straddle. So basically here is where your straddles start getting sold. Now for the first 5 minutes I watched that a lot of puts were getting written. Now there are two chances out here. Here I do not know what will happen. One chance is from here the market goes up, goes flat, goes down, right? But here I do not know what will happen. Okay, there has been a lot of put writing, fine, but this is basically something which is, I would say, too early in the day. Now this red triangle which you see is actually working on PCR. What the PCR is telling you is this is an extreme overbought scenario, right? Then if I mark this point, say this and this. Now observe when this bar breaks down, it means all the people who have sold puts out here are trapped. So the puts will increase in value, the call will decrease in value. Now here the rate is somewhere around 478, 476. So your nearest strike is 25,500. So either you sell the 25,500 call or you buy the 25,500 put. This particular chart is of the 25,500 call. Okay, this needs to be sold. Remember, this particular bar where this low broke was 923 bar, correct? So here, this is your 923, this bar. The price out here is 39. So if you sell this call at 39, in the next 6-7 minutes, price goes down to 22. So for a scalp, this is kind of awesome, right? In next 6 minutes, if 39 goes to 22, 21, it's almost like half. Similarly, this is the 25,500 put. Again, I go to the 923 bar. This is a 3-minute chart, sorry, 1 minute. This is your 923 bar. In this bar, it jumps up to here 75. If you buy out here next 6-7 bars, you get an exit up to 102. So this goes straight up. So either way, you can get money on this. So it's not that if you see this, you will sell a call and sit tight, because this is pure scalping. Now this particular bar where it broke, not only it trapped this, if you see this particular bar, there was a lot of call selling out here also on this bar, right? So both effects actually took Nifty down. If you sell here also somewhere around 470, it goes down to 432, which is 40 points down in the matter of next 6-7 minutes. Now let us proceed. These are single bars where significant volume took place. Now let me look at it in another way. This particular bar I know had a lot of put selling, correct? Because this is green. So the low of this bar is this. This tells me there has been a lot of put selling. It doesn't tell me after put selling market will go up, go flat or go down. So after this put selling gets done, notice for the next 3 bars, this particular low doesn't break. That is, the person who has sold these puts is basically a smart seller. Then you get another signal out here. So if you buy something around here, say 25,500, this 25,480 could be a very good stop loss. Then it goes up. This is another bar which has significant put selling. This is this low. So whatever you bought put calls or sold puts, this becomes your stop loss. It goes up. it goes up till here. By that time the major action has stopped, so you kind of get out there. Then there are a few boxes but no major significance. This is where your major significance comes once again, this bar. You buy out here at 563, next 5-6 bars it comes down to 556, it doesn't move, you get out. See, because if you are scalping and if your price is not moving for the next 5 minutes, this is 1 minute chart, so next 5 bars, if you are not at a profit, please get out. If you buy out here, your stop loss will be probably around here. Then you get inside a box, the box breaks down but no major action out here actually. Similarly box, some action now, there's some put selling out here. So now if I notice, I'm drawing these lines just to make you understand. So there's a lot of put selling out here. Price actually does not break this. It hovers around here, makes a small box, then jumps up. This jump up is looking small, but from 548 it's up to 562. This is also a small scalp. Let us proceed. Strong put selling somewhere around here, 560. Market goes up to 575. This one is strong call selling. So if you go and sell a call, say somewhere around here, 512, market spikes down to 487, your call obviously decays in value. Now, scalping can be by buying options or selling options, whatever. It's the same thing on expiry day kind of. But after 2 o'clock, obviously a buy will give you much better position. This is a box, breaks down, no major action. Within the box, there's selling, but after the box breaks down, there's selling. So you sell a call out here or you buy a put, a little, nothing much. This one, box, absolutely at the last bar, you get a significant put selling. So if you buy out here at 516, makes a high of 536, which is 20 points. So if you are an ATM call, it will give you 10 points. This one doesn't work. This one was interesting. Pretty longish congestion. Very strong volumes one after the other. Because see, prior to this on 1 minute bars, we were seeing one bar which was significant and nothing happening. But this is 2 bars. So this particular point, I realized there's a major put selling which is going on. So if I buy out here 25,539, it goes up to 25,586. So if I'm buying 25,539, I'll be buying a 25,500 call. Okay, this time is 135. 25,500 call at 135. Yeah, this is 135. So the call from 70 goes up to 110. So this is the move you get if you buy this. Similarly, this is 130. So if you sell a put 25,500, 130, this is 130. Somewhere around here. You sell the put at 43, it goes down to 16. This is also very fast. So this is your scalping which is going on. Now the market gives up there, comes down. This is not a place where I'm interested because the volumes are not significant. Remember, this blue dots are significant put selling, red dots are significant call selling. So here major call selling starts to take place, massive. It is breaking outside the box also. I mean, so if you sell out here at 25,480, it straightway goes down to 25,390, almost an 80-point fall. So this is like 25,480. So if I'm buying an option, I'll be buying 25,500 put at somewhere around 220. So this is the 25,500 put. I'm looking at 220. 220 is this. This is 40 rupees. It goes up to 129. Forget it. Even if it goes to 100, it is okay. So 40 to 100 move was predicted by this particular breakdown. Then the market gets flat. Now this was 1 minute chart. Now remember something, I believe majority of you have picked it up. If there's an error in this indicator in the meantime, in between, what you need to do is, don't do anything. Just this calculated figure, you will see it's by default, this is like 100, right? Maybe you have made it like 200 in the morning. So the moment you get an error out here, just change the value to a bit higher value and this indicator will readjust and again become clear. Okay, it will again continue for an hour or so. So this is a point. Now this was 1 minute bar. If I go to a 3 minute bar, this chart is 3 minutes. On expiry day, don't go to a 5 minute bar. 1 and 3 minute are more than enough. So this is kind of a box. This is a box. This is a box. This is a box. Here also if you see, the major selling was here. So today if you notice this time frame, all through the day I was noticing it was on 1 minute, it was not on 3 minute. So if on a certain day the market becomes very congested, then this becomes 3 minutes. Okay, so that's it. I believe it's simple. By the time today is the fourth day, you should have some idea on how to trade this. We will go into depth on this, take trade by trade, understand context. And okay, another thing, let us say I'm working on this on a 3 minute bar. Okay, and this is a place where I can visually see that the market is congested. Try understanding this. Say this particular zone. Now you want to make an idea that outside this zone market is congesting, whether market will go up or go down. So listen, within this zone, almost there have been significant put selling 3 bars, significant call selling only 1, and this significant call selling took place on this bar, which had a high of something around this. So the moment this level got crossed, this call seller, this massive call seller got trapped. That pushed the price up. Here it was very clear, it was a box, it broke down, and if you see this was a very significant call selling which took place here again on this bar. So even if you wait for 2 bars, if you sell out here, it's one way down in the next 4 bars, that is this 3 minute bars or 12 minutes. So 25,470 to 25,380, 90 points in around 12 minutes you will, or 9 minutes you will get this trade. So on expiry days you think market is moving like crazy, it's not. There's a lot of options flow which is going on, and this indicator which you're seeing at the bottom, this is basically which catches, analyzes and shows you the options flow in a very simple bullish or bearish signal. Now you can use this on Nifty, you can use this on Bank Nifty, you can use this on anything. I am showing you examples on Nifty because it is weekly, it has a lot of volume. Again on Tuesday we work on Sensex on this. Bank Nifty, Fin Nifty monthlies, so it is not very logical to day trade those. If you do a positional trade out there, that would be fine. But if you are day trading consistently, I will suggest you stick to Nifty because it is most liquid. Every day something or the other is happening. One day in a week, if you get a movement like this, what we got today, it makes up for the whole week. But whatever responses I have received so far, what I will suggest is the day when market does not move. Okay. I am talking about days like this. First July, market hardly moved, right? This is a 3 minute chart. You will see the breakdowns not working. You will see the breakouts also not working. So here what you have to do is, when you are getting a trade, again as I said, with 3 minutes, maximum 3 bars, you see it doesn't move in your favor, get out of the trade. So trick is, the days when the market does not move in a big way, stay away from majority trades. The day when market moves, like yesterday also markets actually moved because this was a major move down, this was a breakdown, this particular trade got caught. So the day when the market moves in a major way, trade aggressively. The days where markets are flat, try to take a step back. So this is it. So tomorrow we will open subscription for this and also start with the classes on the particular website, getting into much more nuances. There will be one more thing which we will add tomorrow. I have not given that on the demo, but on this course when this is coming, okay, let's go for a 1 minute chart and show you something else. Just give me a second. This one. We also have a kind of a stop loss. This is a very simple logic which I will explain. So the thing it does is, we are going back to the same trade. Say here you are going on a buy. You need a price based kind of following on what this is going on. So this will act as your stop loss. If you kind of sell out here on this breakdown, this is your stop loss. You know this will continue. You can continue your trade. And this also gives you an idea about what the trend is going on. On days like the day which I just showed to you, this is 1st July. This is the day I marked. No, this is 2nd July, sorry. This is 1st July. This day you will see this particular stop loss continuously kind of hovering. But here you will get saved in measured, for example, this particular place. Let's say this was a very, I will say, congested day. As long as we are above this, look for longs. If you are below the stop loss, look for shorts. Simple example. And this becomes your kind of Lakshman Rekha above or below which you do not stay long or short. So after tomorrow, when this particular thing is open for subscription, you will also get this stop loss line along with your chart. So there are actually, this will get included in this particular congestion zone analytics. It will be a single indicator. I want to keep this system totally under 2 indicators, because if you are using a free TradingView account, 2 indicators, custom indicators are the maximum you can use on a particular chart. So if I give you 3 or 4 indicators, you won't be able to use if you are on a free kind of TradingView. And I understand retail has issue with paying subscription charges every month to TradingView. So free TradingView is there. And if I keep it under 2 trade indicators, everybody can use it. So that's all as of today. Tomorrow is the last day of the demo. Wish everyone the best of luck. And let's see what happens after that. Thank you.